What is happening, YouTube? It's Matt Faircloth. Welcome to the Mentorship Monday show. My name is Matt. My company is called the DeRosa Group, and we are an awesome, transparent real estate company that's growing like this. And you guys can bear witness to our growth right here on this YouTube channel or by joining our DeRosa Insiders community, which my man Justin will tell you about in just a second. Mentorship Monday is like this. If you guys want to be a part of the show, this is a live show where questions get answered live on the show. You guys can watch us live Mondays at 4:30 p.m. Eastern, or you can join us by sending an email to helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com, and we'll have you right here on the show for you and everybody else to learn from. And you can pick our brain, ask some questions, talk some real estate, shop. That's what this is all about. This is about us helping you and helping real estate investors become bigger, better, stronger entrepreneurs and business owners. Here to join me and to tell y'all a little bit more about DeRosa Insiders and about his podcast, because now I realize I got to start pumping that a little bit more, is my man Justin Frazier. Justin,
how appropriate! How appropriate! Ask me.
I didn't know. Like, geez, how did I know you were gonna be wearing that shirt? How did I know that we were gonna be talking about your?
How did you know, man? You're genius, genius.
Justin, give us a couple of seconds on your podcast and tell us what it is and why they should check that out, man.
All right, listen. What True Multifamily is a podcast right there, and what we talk about is what happens after the close. Because as you know, Matt. Most of the money that we make in apartments happens after we buy them. And so much content today is about how to raise money, how to find deals, how to get in the door, but not enough about how to run assets efficiently for our investors, for our property managers, our team, and all that. So we tell true stories, imagine that, about managing multifamily, whether we're adding value or some really tough stories about people just getting in trouble and how they got out of it. And it's really compelling stuff. I give updates on our projects. Just recorded a great episode today about business plan writing. I mean, for me, that's exciting. And just all the steps that go into writing an effective plan.
Some real stuff, man.
I mean, it's real. It's real. And we don't really pull any punches, and we just share what it's really like. So that's the podcast. You can find it on all the major platforms. It's called True Multifamily. And you can search us on YouTube too. We're on YouTube now.
And they're on YouTube. They're all over the place. Check out True Multifamily and that. Now, if y'all want to join us to see the inside of a real estate company, to see Justin take these properties, turn them inside out, shake them upside down, smack them around a little bit, get these properties performing to do what he knows how to do, you guys need to join our DeRosa Insiders community right here, DeRosa Insiders.
Yes,
The way you do that is just pick up your handy dandy cell phone and text the word DeRosa to 66866, and you get a bunch of free stuff. You just do it if you want free stuff. Get a bunch of free stuff by texting that over to 66866, or you can go to DeRosaGroup.com/insiders, and they can join Insiders. And Justin, what is Insiders all about? What do they get when they join Insiders? Tell us what that is.
DeRosa Insiders is something that you and I built to let people in the door and see what's happening behind the scenes. We talk about everything that we're doing, whether it's our newest property or a project we've had for a long time. And we give people behind the scenes access to us, to our team, to you. We do Q&As with Matt all the time. We do live videos from the rooftop. Usually whenever we're on a roof, we're like, we should go live right now.
Who's got a phone on? Right.
We're always live whenever we're on a roof. That's guaranteed. Right. But we're always looking to share what's happening when we visit properties, when we're looking at properties. There's also some other great benefits. Last week, we told you we launched a brand new show called Thursdays with Hervé, Market Hunter Thursday with Hervé. And if you're a DeRosa Insider member, you can actually participate and ask questions live. So you don't have to wait for the actually recorded episode a week later. So you can ask your questions of the broker. So we're trying to give all kinds of value every step of the way. There's great insight for you. If you want to be a part of a team or buy multifamily property, you've got to be a DeRosa Insider.
You got to do it. We got to do it. There's nothing to it but to do it, man. Well, join us at Insiders. You guys can see lots of cool stuff that's coming down the pipeline. As Justin said, there's exposure to brokers, exposure to other investors, exposure to other people that are getting things done. We just did a site tour in North Carolina, and our Insiders were invited to the site tour, which was awesome. So lots of great things you guys get from Insiders. Justin, who is in the green room, man? Who do we have that's about to pop in here today?
Today, we have Mr. Cedric Marlowe. Cedric, what is happening, man?
Hey, not much. How's it going, Matt? How's it going, Justin?
Man, I love when you're on the show, man, because you're always commenting. Even when you're not on camera, you're always commenting and saying, "Hey, what's up?" And so we hear that and we appreciate that. And when I saw you were up for this week, I was super excited because I know we always have a good conversation.
I was too, man. You've been a great member of our community, and it's good to have you on, man. So real quick, Cedric, since you're such an active community member here, man, tell everybody real quick why you're amazing and where you're located. I'm gonna let you toot your horn a little bit, which I normally don't let people on the show do. So where you're located, why you're amazing, real quick, and then we'll get into your question.
All right. I'm based out of Philadelphia, Pennsylvania. Right now, why I am amazing because I love adding value wherever I'm at, whatever I'm doing, and definitely with DeRosa Insiders. That's one of the biggest things that I do. You know, I am now venturing into the multifamily space. So adding value to those people that are in DeRosa Insiders and helping them however I can. That's why I'm amazing.
Always adding value. Love it. Yeah, you're always
give back, support others first.
Yeah, no, I'm just saying he's always participating, adding value to other people, and I can 100% agree with that. So today, hopefully, we can add some value to you because I know as you're getting into multifamily and starting to make some plans, starting to have some questions, and so I think that this will really help us. So I'm going to put up your question, and let's jump right into it.
All right, Cedric, what do we got?
All right, so I listen to various webcasts, podcasts, YouTube channels, and I hear a lot of the experts speaking on yield play and value play. So I was writing in just to find out exactly how do you guys define value play and yield play, and when would you use one over the other? Now, my understanding of yield play is going into a market that's pretty much, I guess, saturated, or you're going in basically betting on appreciation versus creating value in a specific asset. So my question to you is: one, is that correct? And then two, when would you use one over the other?
Okay, so it's not correct, but that's okay. I got you. So yield play is like this, and you don't see yield play very often. Although the place that we bought in North Carolina is kind of a yield play. In that, I got a property in Lancaster, Pennsylvania that's a yield play. And a yield play works like this. Yeah, think about like a yield or yield spread or whatever. You hear those words, and all it really means is you are leveraging the difference in your cost versus your revenue. It's just the way to speak it in plain real estate investor English is the cash flow play, right? This is you're just going to buy a property and you're going to cash flow on it. You're going to it's operating above the 1% rule. You know, the expenses are reasonable. You're gonna be able to get in and make money reasonably soon from that property out of cash flow. That is a yield play. Okay. And just making a yield, a return on your investment on what you put in versus what you get out. Yield plays are common in more like C and D level assets where it's like I'm going to go and buy it and just try and make a good delta. Folks that are doing affordable housing like Section 8 housing or whatever, that is all yield. You're not going to get any value add out of that at all. And that's yield play is something that used to happen a lot in the real estate world. Now it doesn't as much because of how crazy overpriced things are and all that, right? So you don't really see that. But what you do see a lot of is appreciation play, where your value add play. I'm sorry, not appreciation play. Value add play is where you're going to get in and you're going to create the value. You're going to, do what we're doing in other properties, tear them apart, put them back together. You're gonna go and reassemble the property. You're gonna go get rents up. You're gonna go dissolve management issues. You're gonna go and create more revenue. Whatever it is, that's value add play. You're buying a property that maybe doesn't make a whole lot of money right now, maybe doesn't make a whole lot of sense, and people are scratching their head going like, "Hey man, why are you buying that?" Let me show you, because I'm going to turn it around. I'm going to do the kitchen. I'm going to do the bathroom. I'm going to do the floors. I'm going to increase rents by $150. Right? That is a value play. Right now, there's also appreciation play which I don't believe in. You're not going to see us do anything like this, but that'd be like buying a property in, Rittenhouse Square, or in an area that's going to hold big value, and you're going to, just know that place will always be, 30 Rockefeller Center, or it'll always be, Rittenhouse Square, Philadelphia. There will always be the Jersey Shore, whatever. You're going to buy it and hope that the value of it goes up because you can't move the location, right? That's an appreciation play, and you're buying in, not even caring about cash flow. That is not a real estate investor play. That's called speculation, right? Okay. Now if you can find something that has a yield to it, a cash flow, and it's in a speculative market that's going to go up or whatever, kind of like the deal we have in North Carolina, where it's right on the edge of downtown. There's some appreciation baked into the possibilities there. We didn't put it on our underwriting, but that property could become worth a ton more because of its location, right? That's some appreciation. That's going to say the G word. That's gambling, a bit, and all that. But that's what those are the different plays you can make when you invest in real estate. You follow?
Yes, absolutely.
Okay, cool. All right. So the appreciation play is really the value play is the one that everybody's doing right now, because of that's what's happened in the last couple of years. But I think that the yield play is something you can do a little bit more of to make cash flow on properties over time.
So let me ask you, with the yield play, are you going in and trying to add some form of value or fix up the asset, or is it pretty much you're just kind of like keeping it where it's at and just collecting the cash flow?
That's the thing, is people, it's not like there's a fork in the road and one side says yield, one side says value, right? You can't, you got it. And that's why in some ways I think it's a misnomer that those that are out there painting them with that brush. What's great is if you find a deal that makes a little bit of cash flow, makes something today, and you can turn that, it makes a little stream of cash flow, and you can turn it into a river of cash flow through value add and through adding value to it. You can do both, and it's important to try and do both. And I think you're lazy if you don't. No offense. Anyone would be lazy if they don't do that, because you're just living with what you're getting out of a property. It's almost your fiduciary duty as an investor to accept, okay, this is the property, and I'm going to try and increase the value that it makes and cash flow that it has over time. So I think you're always doing value.
Yeah, I'd like to add that really that's the goal of real estate, is that like one of the beauties of it is we can add value in so many different ways. So I can make money from this asset churning out cash like a yield play, but I can also be simultaneously investing in the units or amenities or exteriors, landscaping that is going to get me higher rents in the future. So I'm cash flowing now, but I'm also doing that value add. And that's really, that's a lot of what we do. And it seems to be like you're hitting it from both sides, which is going to generate the most returns for you and your investors.
Yeah. You got to do both. Like anybody's doing both. But buying property in Lower Manhattan, you could try and value add somehow. Go ahead.
Yeah. So kind of like the second part of my question, is there any time that when would you use one over the other, or would you?
I still think that you're looking at them as the fork in the road, right? So it's not like, well, I'm going to go value. I'm going to go yield. Now, I'll give you an example. You can look at a property that's running fairly well, that is already in a stabilized area. It's already cash flowing, not a whole lot of deferred maintenance. You can buy it and just, I'm going to leave well enough alone, man. I'm going to cash flow, right? You can do a value play like we've done on a lot of our properties, bring them up to this level of cash flow, and then say, done, not doing my work here is done. I'm now going to move on to the next, I'm going to refinance this property and just cash flow it. So you can start value and then transfer to yield, right? And and I'm going to just milk the cow. I've fattened the cow up. Now I'm going to just milk it for the next couple of years of my ownership, and I'm done, right? Done adding value, and everything else I'm going to defer.
It really depends what you or your investors want to get out of a return and out of a risk profile. So if you've got that renovated property that in a great town and it's a B plus A property that doesn't really need that much work, you might see, I know Matt mentioned like on the, I sort of feel like yield plays are on the lower end, but then also sort of above that B area and that higher end, where maybe you're going to get some of that appreciation, but it's just, I'm going to buy this thing. It's going to cash flow. The tenants are great. The management's great. Everything is sort of like set it and forget it. Right. And someone else did the hard work of, flipping it, if you think about flipping a house, doing all that hard work to value add it. And now I'm just going to drive it. We call it getting behind the wheel and driving. And that's going to kick out a steady, consistent return, but it's probably going to be a lot lower of a return than if I did that effort myself. Right. So same thing if you buy a house and you're going to flip it and put tenants in it, right? If you do that work and you burr it yourself, you're going to get a lot more than if you buy it turnkey and place tenants in it. It's just not going to cash flow as much. So it depends how much work you're willing to do, how much risk your investors are willing to take, and what kind of returns you're looking for.
Yeah. It's got all to do with that. So I think that they become intermeshed, and this also, you got to delineate, deferred maintenance versus value add. Like you buy a property and it's like, yeah, this place needs a roof, all the furnaces are kicked and stuff like that. Like that's not value. That's not, yeah, you got to spend a bunch of money, but that spending money on a property does not mean value.
It's true.
Yeah. Value add is like,
I like that. I'm going to write that down. I like that, Matt. Ooh. I'm going to write that. Writing that one down.
No, it's a true multifamily conversation, man. Sometimes you gotta just catch up on the stuff that the prior owner decided not to do, right? I'm like, man, what? No tenant's gonna pay you any more rent because you got a new roof, right?
Correct.
Nobody's gonna pay any more rent because they got a new HVAC. They'll move out because the roof leaks. They'll move out because the HVAC quick getting out hot air, cold air, right? But they'll move it. Like deferred maintenance will cause them to move. Ooh, here's a good one, Justin. Ready? Addressing deferred maintenance will never make people move in, but it will make them move out.
Absolutely. Yeah. No, absolutely. You have to.
That down,
man. I wrote down your first one. You get one. You get one this episode.
Another good one though. I never know if it's going to go out of my mouth, man.
Oh, we know. No, that's absolutely right. Because to Matt's point, we spend a lot of money on a lot of things, and especially early on in a turnaround project like we have at Diamond Ridge right now, I'm not necessarily getting higher rent because I'm trimming back the trees or addressing some landscaping issues or trip and fall hazards, right? But it all contributes to the overall picture, and we're looking at this with a long-term view that yes, over time, the investment in this property now, in addition to the unit turns, that will be that value add, will push up rents over the longer period of time.
Over time, you create like a context of quality that people just feel the quality in your complex, and that's people are willing to pay for that. But that's not one thing. That's just if you don't let the property go, you keep everything up. Everything's the high bar and all that. That's the difference. But anyway, so Cedric, I hope we thoroughly confused you. No,
of course. You thoroughly confused me. No. Thank you. No, you guys did a really great job with explaining the two and differentiating the two, and also like Matt, that was huge with what you said with regard to deferred maintenance, because a lot of times my thought is when you're taking care of the deferred maintenance, you're adding value, and a lot of times no, you're just basically, like you said, catching up with what the prior owner didn't do. And there's no tenant or no resident is going to pay you any extra for that. That's basically what they are looking for or what they expect from where they lay their head every night. So that's major.
I'm glad somebody on this.
One of us was. It's good. Glad you were listening.
Yeah. Good stuff. Well, Cedric, we know you're already a member of Insiders, man, and I know you're a great member of our community. You're a great contributor. I love seeing your comments and your thoughts out there that you've been sharing regularly. So keep it up, man. So great to have you as a member of our community and as you're a resource, man. So I hope that y'all watching decide to come and join active investors that are asking good questions, having great conversations, as our buddy Cedric is here on Insiders. So. Cedric, we'll have to have you on again soon, man. Thank you.
Bet anytime. Just let me know.
Good stuff, man. We'll see you on Insiders.
Thanks, man.
All right, guys, take care.
For me, Matt, that's a great question. Example of, where people get in the lingo, right? And they're on podcasts and they're talking about yield play, yield, value. And it's like, what does that actually mean to me, right? When I'm looking at a deal, how do I know if this is one or the other? It doesn't matter if it's one or the other. And so to be able to help set out and just break it down, another great episode.
Yeah,
really
it is. And there's a lot of jargon out there, and there's a lot of folks that are presenting things that's like, hey, here's the Holy Grail. Here's, take my value play course and my yield play course and show you how to do it.
Right.
And where really it's all smoke and mirrors, man, because if you're active in the real estate investing space, you got no choice, man. You're doing both of them. You are in that. So that's a great combo from a great guest, and yet another great episode, as we said, man. So listen, one last time, you guys watching, help me at DeRosaGroup.com is the email address. Help me at DeRosaGroup.com. And we have you right here on the show to chat with me and Justin. You guys get a free month worth of Insiders if you're not already a member, and you guys can take it from there, man. And we're really grateful to have you guys watching.
We'll see you next time. You ready?
Thanks for watching, guys.
Right.
Have a